Welcome back to What's Hot, What's Not. C-R-E. It's Tuesday, March 31st, 2026, and today we're breaking down the hottest U.S. rental markets by year-over-year rent growth. What's hot? Atlanta is leading the pack with 5.8% year-over-year rent growth. Average one-bedroom rents jumped from $1,350 to $1,428. The city's entertainment, film, and tech sectors continue to drive workforce housing demand. Strong in-migration from higher-cost markets is keeping occupancy tight. Minneapolis surprised many with 5.2% rent growth, one of the strongest performers in the Midwest. Rents climbed from $1,157 to $1,217. Limited new construction and stable employment are supporting landlord pricing power. The Twin Cities offer relative affordability compared to coastal metros. Chicago posted 4.4% to 5.5% rent growth, depending on the data source. Average rents rose from $1,539 to $1,607. The city benefits from diversified employment and a deep renter pool. Suburban Chicago is seeing cap rate compression as investors chase yield. Cleveland continues its momentum with roughly 5% rent growth. Effective rents hit $1,406 with vacancy at just 4.3%. Limited new supply over the past 5 years has tightened the market significantly. Cleveland topped the country in apartment rent growth in 2025 and is carrying that momentum into 2026. Virginia Beach rounds out the top performers at 5.5% to 6.1% rent growth. Military employment and healthcare jobs provide stable demand. Coastal constraints limit new supply, supporting landlord pricing. What's not? Austin continues its free fall, down 18.2% from its September 2022 peak. The median asking rent dropped to $1,357 in February. Vacancy hit 13.8% in 2025, up sharply from 8.2% the prior year. This marks 34 consecutive months of year-over-year rent declines. Oversupply from the 2023-2025 construction boom is still being absorbed. Phoenix is also losing momentum, with asking rents down 4.1% year-over-year. The market is normalizing after years of pandemic-era gains. Fort Myers and Naples in Florida are seeing the steepest declines, down 6.4% and 4.4% respectively. Why it matters. The rental market is splitting into two distinct stories. Midwest and select Northeast markets are outperforming due to limited supply and stable demand. Sunbelt markets that overbuilt during the pandemic boom are now giving back gains. Migration patterns favor affordability, but oversupply is the dominant factor in rent performance. Investor takeaway. Follow the supply constraints, not just the migration. Atlanta, Minneapolis, Chicago, and Cleveland offer the best rent growth momentum right now. Avoid markets still absorbing 2023-2025 deliveries. Austin, Phoenix, and Southwest Florida need more time. The Midwest is quietly becoming the best risk-adjusted play in multifamily. That's your rental market update. Thanks for tuning in. Don't forget to like, share, and subscribe. Visit hotnotcre.com to learn more and subscribe to our newsletter.